Okay, we are now getting Yoram on. Here we go. Hey!
How's it going?
Before we start, what is Dealroom?
Dealroom is a global platform that provides intelligence about startups and startup ecosystems. So, our typical clients are venture capital firms. We do a lot of work with public institutions, tech companies. We help them to discover promising companies, and we help them to understand trends and map out startup ecosystems.
You are the data guy. There is no question too complex that you couldn't instantly pull out a chart that answers everything and perfectly.
Yeah, let's go.
Okay, perfect. One thing that I regularly hear in Europe is like, who needs trillion-dollar companies anyway? We are happy that we have a bunch of smaller fish. One big part of your report is specifically diving deep into the market leaders. You specifically looked at the 7 biggest companies in the S&P. 2, 3 really important things, and I will take this first one from your report, which is basically if the whole world is connected and every industry now acts like on global power law, you also have market leaders that dominate markets globally.
Yeah, you always had powerful companies. I guess Coca-Cola used to be a very powerful company that was everywhere. Yeah, with technology that everything is amplified and everything is more has more leverage. It feels like these companies are indestructible, but then suddenly they're not indestructible anymore, and they can also be replaced.
Let's do quickly like a deep dive into all of that. And then afterwards, I want to take from your report the impact outside of having very good stock market back up and down. Basically, the Mag 7 of the S&P is now bigger than the whole stocks Europe combined.
Yeah, that's basically all major stocks in Europe. It goes from having a combined market cap of 5 trillion and today it's 15 trillion. So it tripled. You see the Mag 7 going up massively from almost zero to 18 trillion now.
So there's like two big arguments here. Like one, stock market is speculation. And the other argument that we regularly hear is that stock in Europe is undervalued because of exactly that the stock market in the States is stronger.
Yeah, yeah. The data does seem to show that European stocks are undervalued. But yeah, you need to adjust for performance. European companies don't perform as well. This adjusts for that. And yeah, European stocks tend to be far below the line, which means they're undervalued.
But what's interesting to me is like what David said here is that Chinese BYD versus Tesla is basically factor 1 to 10 in comparison to the fact that BYD factories are roughly 10 times the size of the gigafactories of Tesla is insane.
BYD is penalized for being a Chinese company. I think also Tesla has maybe some higher margin business, like being a robotics company, and it is surprising.
Now the following charts are like the one thing that really stuck out to me in your report. This part, why does it matter to have big tech in Europe? So number one, Mag 7 now is like the dominating R&D spending. Is this basically what you're trying to say with this chart?
Yeah, I think what it is also showing is that in the US, R&D has shifted from automotive and also the financial sector. Now that's being completely eclipsed by Alphabet, Meta, Apple, Microsoft.
And more importantly, Mag 7 is now bigger, like their R&D and CapEx is now bigger than all of the world we see combined. What the fuck does this chart mean?
So those companies on the right, they invest something like just over 400 billion every year. CapEx, most of it goes into fixed assets, basically things that you can put on the balance sheet.
Buying machines, buying hardware.
Yeah, and data centers, buildings that usually have kind of a 3-year, I believe, life.
So having a Google is equivalent to having most of Chinese and European VC additionally, just on R&D. That's a meaningful compounding effect if you don't have these big companies. And the other one, which really freaked me out a bit, is not only R&D, they are now also investing money into startups than anything, like all the VC in Europe combined.
Yeah, exactly. So the red part is again the Mag 7 doing investment rounds, VC investment rounds into startups. They've been actually kind of prohibited from doing much M&A. by the previous administration, and people expect that will change now. It's crazy to imagine that these companies were created not that long ago, literally in a crunch.
A question from the chat. Does invested means investments into founders or acquisitions? My understanding, this is only investments excluding acquisitions, right?
This is correct. This is venture capital.
Yeah. This is also like when it comes back to productivity, because we had a comment before that like productivity nowadays, it means like automation, means robotics, means AI and so on in the next few years. This is also where most of the productivity uptick in the chart we had before comes from, right?
Yeah, totally. This is real GDP per worker. So it's also a reflection of super high salaries. But some of them clearly are productive. In aggregate, they have 5 billion users. So each worker has an extreme amount of leverage.
And this little uptick here that we see very strongly is exactly where this comes from. Like these are the companies that create this uptick. It won't get better in future with OpenAI and Anthropic in the mix. So I agree on that.
The US did experience a productivity boom in the kind of like the first .com era. So the Netherlands used to have higher productivity than the US, but now we started to flatline in the last 10 years, and it's not really well understood why. And now Germany is flatlining, Italy completely flat, also the UK, especially the information sector in the UK.
We are lagging behind in these high leverage industries, and therefore now you start seeing this in the productivity as the market shifts.
It must be something to do with the strength of the companies, the market leaders. I think that also has an impact on price.
Folks, if you have questions, like please throw them in. I tried to collect a few on Twitter and LinkedIn beforehand. This one was one by Bruno. Trillion-dollar market companies don't really capture the fact that ASML has like 50,000 suppliers. A lot of mid-sized companies that act as an ecosystem to the bigger companies. What's your personal POV on this? It's like, what is your POV based on the data?
This particular example, like having 50,000 suppliers, I think like that's more like a thing of the semiconductor industry, and I think advanced manufacturing in general is hyper connected. The fact that you don't have big companies also coming out of that is that's not by design. That's like actually not a good thing.
A lot of the big tech basically rolled up a lot of other markets, including, for example, advertising worldwide. I think ads is specifically an interesting example because we had a lot of ad business here as well. Like nowadays, if you do like ad spends online, you just give Meta a lot of money.
It seems like in '99 we introduced the euro, which you can say is super bad, but it was at least bold and ambitious, and it got done. After that, most of the stuff that came out of the EU was actually kind of protection side.
Avoiding risk basically is like the main idea. Sunless asks, given the current political situation in the European government, what realistic reforms can we expect in the near future? I personally don't know, but like one thing I noticed, at least in Brussels, there's a certain vibe shift, and I'm very curious myself to understand how far, but they are actually very willing to make bold bets. The problem is how Europe is structured. I don't know how much they can actually do. From Pars, why don't European corporates invest more into startups? The biggest part of this investment spending is infrastructure companies investing in startups so that they afterwards have the money to invest back into and pay for the infrastructure. They also think of just like building up the ecosystem that uses them, right? And we just don't have this infrastructure. This is at least my reading. What's your take?
I think if we have to pick things to really fix, I think the infrastructure should be in energy and creating a grid and investing in clean energy. I think that seems like something everybody can get behind. That's good for so many things. We're kind of missing the AI wave, it seems like, but we can build very cool stuff on top of it, and it will get more and more commoditized. And
agree and disagree. The more specialized your use case, the more you need to train this specific model for you. And the moment you do that, you take it millions of euros and send them to the States, to like a data center. Energy maximization, we need the competence to do these specialized models, all this kind of stuff. This is a thing we cannot just give up on. This is my personal take.
I agree with that.
Cool. So thank you so much, Yoram, and see you on Twitter.
Awesome. Thanks a lot.
Chat, see you in Twitter and all this kind of stuff. Bye-bye.